Hello, and thank you very much for taking a look at our financial model specific for an RV park. In this video, we're going to focus solely on the Excel document, how it's used and how it can be easily integrated into the accompanying business plan that comes with this package. You can order it directly from rvparkbusinessplan.com. We charge $49.95 for it. Once you place your order, you'll be directed to a download page where it'll simply be delivered to you as a zip file. There are about 12 files in there, including the business plan, the Excel model, SWOT analysis templates, the RV park pitch deck, as well as some ancillary information regarding how to start a business, how to start an RV park, as well as a funding source directory. This is the Excel model. We make it very easy to use so you can adjust or expand any aspect of these financial statements by simply answering this very short list of questions. We break it down into categories. So for financing, you would enter how much of a down payment is going to be made from the owner and from investors, how much will come from a bank loan. And you can very quickly change any aspect of it, and this will automatically adjust. So for instance, if you're looking for, in this scenario, we're showing an RV park that is going to have an $850,000 startup cost. If we change this to 0, you can see that this will automatically, any questions that are no longer applicable will disappear. And if we change it to $850,000, that little error message will go away. And I'll show you below where that is calculated. So let's go ahead and set that back to the way it was. This is the total amount of funds that you're going to be using for developing this business. So for land, buildings, working capital, your furniture, fixtures, and equipment, these all have to total the exact amount of the money that you're looking to raise. If they don't, so let's just go ahead and call this, instead of 500,000, we'll call it 400,000. Again, that error message will pop up to inform you that the top does not equal the bottom. For calculating your revenue, in this model, we're showing 25 spaces with an average fee of $50 with an occupancy rate of 75%. Let's quickly take a look at the financial model right here, yearly sales. So you can see this is from RV space rental income. And we have a few additional categories for store sales and laundry income. If these are not applicable to your business, you can simply remove them by entering 0, and these will go ahead and disappear. But let's go ahead and change the occupancy rate from 75%. Let's just call it 90%, which I know is a bit high. And as you can see, the rental income line will automatically adjust for you. We'll set this back down to 75%. There are other questions. For instance, if you have an on-site general store for selling, general goods that people use when they travel, you can enter in your anticipated approximate daily sales. If you're going to have a washer on dryer on site, how much you'll generate from this revenue stream, and these will automatically update through all of the financial statements in this document. You can also set your seasonality of this business. Here we have it set for 40% during the summer travel months. Again, that can be adjusted based on specifically what you're looking to do. This is the cost of goods sold. So for RV rentals, we assume a 3% cost. Just for credit card fees, if you're doing something along the lines of using third party to promote and reserve spaces, this may be higher, but again, you can adjust it to whatever the appropriate amount is. We do include additional documentation on how to do that. For the revenue growth rate, from year 1 to year 2, we show it at 10%. From year 2 to year 3 at 7%. This is immediately reflected here. And let's just go ahead and change it to 15% to see what happens. And as you can see, it automatically adjusts for you. And we'll set this back down to 10%. Again, your breakdown of how you intend to use the funds that you're looking to contribute or raise. These are your first year expenses overview. So we have these set at just some standard figures, which again can be adjusted at any time. These will automatically flow through to the profit and loss statement. And on a yearly basis, you can adjust how much these will increase by. We set these by 3%, but if you change it higher, so this is set at 3, let's just set it at 5 just to see what happens. It automatically adjusts appropriately to reflect a 5% increase in your yearly underlying costs. We have some just general questions about cash flow. How much of your after-tax and after debt service will be distributed as dividends to the owners? How much of this will you reinvest in the business? This does not need to equal 100 because the remaining 10% in this case would just be kept in the cash account of the business. So it's really just these two questions, and everything else will automatically calculate. For marketing matters, this is a breakdown of how you intend to allocate your marketing budget. These have to equal 100%, and again, if you change it and it doesn't, the error message will pop up. And this will flow through to your marketing return on investment, and that way you can see these important metrics. This business plan and the financial statement has a profit and loss statement, the expanded profit and loss statement, which shows your P&L monthly for the first year and quarterly for years 2 and for year 3. Your cash flow analysis, again, all automatically calculated. Your cash flow analysis is expanded for year 1, again, monthly, and for years 2 and 3, done quarterly. Your balance sheet, again, nothing you need to touch, automatically calculates. Your break-even analysis and your business ratios page. And we have a lot of notations throughout this document to help you just to reiterate certain things as you go through this. Any tab that says editable with the questions start here. Any tab that says editable, you can edit. This is for your payroll, for owner's salary, property manager, the head count, whatever you are doing with your business, you can adjust here. Another editable table is your demographic tables. In the business plan, we discuss where to get that information. You can pull it for any area. Your loan amortization, which again you entered in $750,000, carrying a 6% interest rate over 20 years. This all gets sourced right back to here. So if these terms are different, this will automatically adjust for you. And it shows it up to 30 years. So that we have it set at 20, you can go up to 30 years with that. Some monthly tables that break down your personnel. And that's essentially how this works. We kept it as simple as possible. Again, thank you very much for taking the time to take a look at this video. We certainly look forward to your purchase. Again, it's $49.95. It's available directly on the website. Once you check out, you'll be immediately prompted to download it. And if you have any questions, you can contact us via the live chat or through the Contact Us form or via email at info@rvparkbusinessplan.com. Thank you very much. Take care.